Alrighty, guys. So I'm not even sure where to begin with this Fibonacci flavored fantasy chart. Let's tear through this pseudo-scientific mess with a scalpel of logic and market structure because what we have here is not a very simple strategy. It's a spaghetti chart tangled with buzzwords, replay mode delusions, and post hoc rationalization. So we're going to be going over every step of what this chart and I found this actually on somebody's YouTube channel, and they claim to be uh, they claim that this was the holy grail of a setup, and you can tell they're trading the ES on a 5 minute chart, and we're going to break down all of the jargon and everything, and compare this to one of our charts so you can see the contrast and see the difference. Okay, so let's go ahead and break these down in detail. So the HTF liquidity sweep. What exactly is this? And let's go ahead and demystify it as well. Now, here we go. The idea of high time frame, which is what HTF stands for, liquidity sweep, is as vague as it is misused. Okay, liquidity doesn't sit neatly at wicks waiting to be swept. Institutions don't place their orders like they're choreographing a Broadway show for retail Fibonacci fans. Real liquidity is fragmented across dark pools, limit books, and latency arbitrage, not hidden behind 5 minute candles. Let's go to the next one here. The price retracted to key level. All right, let me tell you what the translation of what this means right here. That the price moved to a spot I decided was important after it happened. This is classic hindsight bias right here. Anything can be a key level after price reacts to it. It's the trader's equivalent of reading tea leaves and claiming they predict the future. Respect, what is this? Respect breaker block. Okay, that's a big word. Let me give you a red flag alert on that one, guys. Breaker block is a made-up term from ICT and smart money concept lingo meant to sound institutional. What it really is a renamed support and resistance zone, usually drawn in a way that fits the narrative after the move. These blocks are subjective, cherry-picked, and have no consistent statistical edge. Here we go with this one. Fibonacci at 7.86 reversal level. Let's debunk the Fibonacci fallacy. Let's be crystal clear. There is no empirical evidence that the 0.786 level, or for that matter, the 0.618 or the 0.382 or any of them consistently act as reversal levels across markets and time frames. These ratios are pulled from nature, not markets. Markets don't care about the golden ratio. They care about order flow and liquidity, okay? And if you notice here, it says replay mode on the chart. This clown literally took the trade he claims he made 2,400 bucks on in replay mode, wants applause for the trade that was not live. That's the trading version of dunking a 6-foot rim in your garage and claiming you're NBA ready. Now, let's talk about the chart, which is a technical disaster right here. This chart is the trading equivalent of a toddler with crayons and no supervision. You've got multiple Fibonacci lines, stacked take profit levels, arrows, blocks, labels, zones, and not a single trace of objective signal detection or risk modeling. This here, guys, is what happens when someone mistakes aesthetic complexity for strategy. Now, let's go ahead and turn over to one of our charts. Now that you've seen the spaghetti mess here, this is the exact same trade the trader claims that he took on that 5-minute chart. You'll notice that the predictor is cleanly above the zero line, and so is the price line right here. And you're also going to notice that this actually ran all the way until the predictor, which is the orange line, crossed below zero. This crossing below zero was precisely bingo at that bar right there. Let me say it simply, guys. Simple is better. Okay? PredicMo or not, clean charts, objective signals, and quantifiable criteria beat pseudo-intellectual clutter every time. Real strategies focus on a quantifiable edge, not storytelling. Market microstructure like volume imbalances, digital signal processing, and things of that nature. Okay? Simple is better. Now, the final thing the guy said about his charts is that he made a comment in the description where he says, just 5 accounts in that trade would have made $12,500 in one day. I was blown away when I read that in his description. And just like that, he exposes his real goal. He's selling dreams, not trading reality. If compounding via copy trading and prop firms was that easy, he wouldn't need to advertise it. He'd be quietly compounding millions. But here he is selling reversal level dreams from a demo replay. Okay? Let's not overcomplicate trading, guys. Let's toss out the fairy tale Fibonacci and breaker block clutter. If your edge isn't repeatable, measurable, and statistically sound, then it's not an edge. It's fan fiction with candlesticks. Let's clean the charts, kill the myths, and trade like pros and not prophets.